Good Wednesday morning. Welcome to Top Gun Options Market Sitrep. Matt Buckley, call sign Wiz, the primary and weekly options model portfolio manager here at TGO. And kind of a quiet day, folks. The futures are flat to slightly up on news out of Alcoa. Now, Alcoa unofficially kicked off earnings yesterday after the close. They more or less met expectations, so the stock's up about 2% pre-market. Other than that, the market's just moving sideways, kind of waiting for earnings season to kick off in earnest. Nothing really big on the flight schedule today. Some crude oil inventories and a bond auction. Crude oil inventories, we have a couple hedge positions on USO, the United States Oil Fund, in one of our model portfolios that may be impacted by crude oil inventories, but usually a crude oil inventory report doesn't swing the USO around that much. Tomorrow's flight schedule, not much more exciting. Obviously, every Thursday we have weekly unemployment claims. Wholesale inventories, interesting report. Why do traders care? Future business spending. It kind of predicts future business spending because companies are more likely to purchase goods once what? They've depleted their current inventories, right? Got a couple Fed members speaking, a 30-year bond auction, and Friday, again, nothing really to move the market, some trade numbers and import numbers as well. So nothing really huge there. Want to cover a story on Apple that appears in the Wall Street Journal today. Apple working on a less expensive iPhone. Now, couple this with reports that the iPhone 6, they're already starting to make noise around the iPhone 6. And I'm not an Apple user, folks. Full disclosure, BlackBerry guy, old, stodgy. I'm waiting for the BlackBerry 10 actually to come out end of the month. But so got a lot of friends that use Apple, though. I follow all the Apple trading. I know Apple like the back of my hand, folks, even though I'm not an Apple user because I trade the heck out of it. And I got to tell you, Apple fatigue is starting to set in. Even my most ardent Apple friends who you know, the camp out in front of the store folks are starting to get a little pissed. They're like, whoa. I just literally got my iPhone 5, and now they're coming out with an iPhone 6. When's the iPhone 32 come out, folks? When's the iPad mini iPad come out? I really believe that technology is starting to become commoditized. The Amazons, the Samsungs, the Android 3, Lenovo's rumored to be coming out with a phone. I'm telling you, folks, that Apple is going to see sideways to downward pressure. When Apple went north of, let's take a look at a chart of Apple here. 6 months ago at Top Gun Options during one of our live trade briefs, when it breached 700, and people right here, when it breached 700, people were calling, analysts were out there racing to the microphone. Apple 800, Apple 850, Apple 1000, and then one analyst did their nice, cute headline making Apple 1111, right? I said sold the hell out of Apple. I said Apple's going to see 600 before it sees 1,000, and I was wrong technically. Why? Because Apple saw 500. So I said it would see 600, and it went all the way down to 500. And right here, this was a dead cat bounce, and halfway up this dead cat bounce, we put on a very bearish double vertical spread. That's two bearish trades on top of each other. That was a bear call spread and a bear put spread. And as soon as this thing rolled over again on this dead cat bounce, that trade made 600, 700%. I can't remember, but triple digit returns. Same type of things. Also put a double vertical on right around here as it did another rise up, and it's pulling down here. Folks, we've been trading the heck out of Apple. This is actually our weekly options model portfolio. This model portfolio, it's up, $5,000 year to date, which is what is 7 trading days. 7 trading days, we're up $5,300. Let me show you since we started the weekly options model portfolio on December 3rd, beginning of December. So December 3rd through yesterday's close, the model portfolio is up $16,385. That's an average of $3,200 a week in gains. And my mission objective when I came out with the weekly option service was to shoot for about $1,000 a week in gains in the model portfolio. We've tripled that, $3,200 a week in gains. And as you can see, nice returns in Apple here. Folks, you have got to try out this service. Give it a test flight. Okay, we have 2 positions that are expiring this week. I shoot to have 2 weekly options trades in here, and we do a live trading session every Friday at 1 p.m. and I blast out email and also SMS alerts if I ever make updates to it. But look at this. Apple weekly bear call spread. It's up 73%. It's Wednesday. We've made $878. Still have another $323 to go. SPX Iron Condor up about 59%. Profit of $712, $13 so far this week, with another $488 to go. So another, call it, we're looking at about $2,300 in weekly gains this week if everything keeps going the way it does Wednesday through Friday. And as I said, it's kind of a quiet week, not too much going on as far as Apple or the SPX in general. So we're looking at upping our gains from the beginning to well over $18,000, $19,000 in how many trading days is that? 20 some. We had New Year's day off, half a trading day. We had Christmas Day off. So, call it 20 some trading days, folks. And we're seeing about, $18,000, $19,000 in gains. That's almost just under $1,000 a day in weekly options gains. If you're not going to check out this service and give it a test flight, I don't know what to tell you. You don't know what a good trade looks like. So go to members, and I'm going to show you a bearish trade here on Apple in a couple seconds. But I'm evangelical about this stuff, folks. That's why I'm telling you about it. Go to services, and you can hover over weekly options, or just go to topgunoptions.com/weekly-options. Scroll down, click Take a Test Flight. Don't take my word for it, right? People lie, numbers don't. Nearly $20,000 in weekly options gains in a month, 6 weeks. Like I said, we are averaging $3,200 a week in profits in this model portfolio. Can it continue? I hope so. Obviously, past performance is no indication of future results, but I certainly hope so. In this type of environment, weekly options are great to use. Why? I don't want to be too long trading the front months. January, February, folks, we have a debt ceiling debate coming up at the end of February. Timmy Geithner can only use accounting gimmicks so long to stave off we officially defaulted on our debt January 1st. Legally, we defaulted. But through smoke and mirrors, Timmy Geithner can push that to the end of February. We're going to see volatility increasing. We're going to see cats and dogs living together. The Republicans are going to dig their heels in, and it's going to get ugly. You think the fiscal cliff debate got ugly. Republicans are not going to fold like a cheap suit this time like they did last time. And along with this Apple fatigue, Apple's coming out with earnings towards the end of the. Well, let's officially take a look here. Towards the end of the month. So I've been using weekly options on Apple. Apple tends to trade sideways into earnings. They usually don't have any wild swings prior to earnings. And with this talk of an iPhone 6, I know some folks, especially Top Gun Options, are like, "Hey, Wiz, isn't that good news?" No, it's not. It's bad news. The turnaround cycle between the iPhone 4 and the iPhone 5 was under a year. And that was the first time it's been under a year. So I really think that between the passing of Steve Jobs and Tim Cook taking over, Tim Cook's the guy that says, "I want a new product by this date." Steve Jobs would say, "I want a new product." And until it's ready, it's not going anywhere. Okay, so we're going to continue trading weekly options. I'm going to continue to be bearish weekly with Apple. We currently have a Jan 11, obviously this Friday, this trade right here that expires. Hopefully, and there it is right there. Both those trades, $1,200 a piece. Looks like they're going to capture a full profit this week of $2,400. Imagine potentially doing that 52 weeks a year. Obviously, that's not going to happen, but that would be my target. But out to expiration, which is next Friday, I'd be taking a look at a bear call spread, another bear call spread on Apple. Now, Apple can move wildly, right? As we've seen, it's really found its new, I'm not going to say happy place because I think this is unhappy for Apple, but it's really trading, if 505, 510. Yeah, we saw the spike on the fiscal cliff resolution up to 555. That ain't going to happen again anytime soon. So a nice safe bear calls is the 545, 550. Let's see what type of premium we're looking at out to next expiration or January expiration. So the bear call spread, folks, is saying I do not believe that Apple's going to go above 545, and then I'm going to buy a 550 call on top of that as a hedge. So if we do wake up and say, and they say, the iPhone 6, heals all, everything that's sick in your body, and Apple races to 1,000, we're hedged. We're stopped. Our losses are stopped out at 550. So let's go ahead and build this trade. It's called a bear call spread, and I'll show you exactly what we do in our weekly options live trading sessions. We use TradeMonster. You can go to trademonster.com/TGO for Top Gun options. You can get some great rates, but this is a great platform for beginner to intermediate, even advanced folks. So I click on vertical spread. Like I said, we're going to do a bear call spread. It's also known as a credit spread. Why? Because we're going to take in a credit to do this trade. We're actually going to get paid to be bearish and support our strategic mindset on Apple. And up comes the 545, 550. And I'm going to click sell because I'm selling a bear call spread, right? So I'm selling 10, and we'll take a look at the risk here and see if 10's okay with us. Selling 10 of the Jan expiration next Friday, 545 calls, and as a hedge, like we talked about for protection, I'm going to buy 10 of the 550 calls. And I'm going to go mid-market, folks. Market makers are rich enough. I don't need to donate to their fifth wife fund or fifth house in the Hamptons fund, okay? A bid and an offer. This is how much they're willing to let it go for. This is how much you're willing to pay for it. Never pay retail, folks, right? So I'm going to go mid-market on this, and it looks like it's right around 90 cents. I'm going to click Analyze, a great tool on the TradeMonster platform, and the first place my eyes go is right here. Maximum loss. Do not ever put your eyes right here first. Go right here first. This is what professional traders do. How much can I lose on this trade? I never ask myself how much I can make on this trade. I always start with how much can I potentially lose on this trade. 23% probability using at the money volatility of losing $4,100. And I can tell you that's not going to happen. Well, Wiz, of course that can happen. You said if it races up to 1,000, we're hedged. Well, guess what? I'm going to put in eject criteria. There are certain eject criteria that I teach my Top Gun options traders where we're going to bail out of a trade for minimum loss. Very rarely are we going to wake up and incur a maximum loss because we're always looking for the exit, right? We contingency plan. Look at this, potential for max profit, 72%. This is a very high probability bear call spread on Apple of collecting a full $900. Guess what? At Top Gun Options, in my model portfolios that I manage, I very rarely want to risk anything more than 5% on any one trade in my model portfolio. Why? Because I want to live to fight another day. The model portfolios are a notional $100,000, so I never want to risk, usually don't want to risk more than $5,000 on any one trade. So this is about $1,000 underneath my max risk. So I'm going to go back and I'm actually going to, I could do two things. I could increase the number of contracts I'm going to trade, or I could lower the spread, right? Let's take a look at this one. Let's take a look at selling the 540s again. We haven't seen 540 in a while. Last time we saw 540 was on what? That fiscal cliff resolution. I don't see any fiscal cliff resolutions anytime in the near future here. So if anything, I see bad news out of the market. So look at that. Instead of 90 cents, now we're looking mid-market at about $1.20. But let's click Analyze and see what our potential max loss is here. Look at that. Gone down to $3,800. So now I can do this. Now I can definitely increase my contract size. I'm going to do 15 of these. And 15 of these are probably going to get me right around my $5,000 max loss. Okay, so 15 contracts selling 15 of the Jan expiration 540 calls. As a hedge, I'm going to buy 15 of the Jan 545 calls. Create order. We're going to go mid-market again. and it was right around $1. I'll go $1.17. And I'm going to click Analyze. What's our potential max loss? Boom, right around $5,000, close to $6,000. I'm okay with that as a pilot in command of the model portfolio. I signed for the jet, and it's my airplane. 28% probability for taking that max loss. Again, we're going to manage risk, and hopefully that's not going to happen. But look at this. Our potential for max profit is 67%. Still a very high probability trade. And look at that. Potential profit of nearly $1,800. Okay, look down here. Our potential to break even on this trade or make anything is 69%. And there's our break even, 541.17. That's up there, and that's again up around the fiscal cliff resolution concerns or resolution, and a nice risk to reward. Not huge, but a 1 to 0.31. Again, we don't have to worry about earnings. Earnings are after this, and as I said, part of my strategic mindset is Apple moves sideways into earnings, and expiration is next Friday. I like this trade. Let's review it again one more time. Selling 15 of the Apple Jan expiration. That's next Friday, not the 11th, but the one after that. Let's just pull up a calendar real quick. The 18th, right? Of the 540 calls, buying 15 Apple Jan 13 545 calls as a hedge for a net credit, bringing into my account $1.17, obviously times 15 cents. Okay, I'm going to click create order and going to fire that one down range at mid-market and hopefully get filled at the open. Okay, so that's what we do here at Weekly Options. We do a live trading session every Friday at 1 because most weekly options expire Friday afternoon at the close. And you really have to learn how to trade weekly options, folks. They are afterburner trades. They can move wildly with you, wildly against you, and you have got to know what you're doing. And that's what we do here at Top Gun Options, is train you. You can watch as professional traders manage model portfolios. It's like standing on the floor of the New York Stock Exchange or the CBOE, Chicago Board Options Exchange, and watching professional traders live in action as they manage model portfolios, okay? And now what I'm going to do, I'm going to turn around right now, and I'm going to send this out via SMS, text, and also email to my weekly options traders, and they're going to watch as I manage this in my model portfolio. Again, folks, people lie, numbers don't. There you go. Since we started this service at the beginning of December, we're up $16,385 in profit. If the week goes as planned, we're going to collect another $2,400. That's just about $19,000 in profits since the beginning of December, and that's not even a full 2 months, folks. So what are you waiting for? Like I said, go to topgunoptions.com/weekly-options. Take a test flight. And take a test flight for 2 weeks. Folks, give it a shot. What have you got to lose? Okay, I got to run. Got to get ready for the open. Got to do all my pre-market intelligence briefings, get those out to my Top Gun Options traders, and we're going to get airborne. Okay, I'll be back tomorrow with our sitrep, more earnings on calendar, and we'll press forward and look to potentially make some money as we head towards our next gorge. I'm getting rid of the cliff terminology here. The next fiscal gorge, which is going to be the debt ceiling debate. Okay, happy hunting. Make sure you hedge, and I'll be back with tomorrow's sitrep.